Welcome everybody to today's YouTube Live at the Apiary Fund. Again, I'm Dave and I'm glad to be with you guys today. And a lot of times we get a lot of questions are, what are your favorite indicators, or what indicators are good to use? And well, we talked to a lot of new traders who are just getting started. I didn't really want to get into in-depth indicators that may not help you as you're just getting started, but just basically the basic top 3 indicators that I would use as a trader, or I have used as a trader just getting started, to kind of use as what I consider to be called trading wheels or training wheels, right? Because we need to take our training and have some sort of method to the madness, if you will. And as we're just getting started or coming right out of the gate, or even if we're experienced traders, these indicators are often useful, but you got to know when to use them and when not to use them. As with any indicator or any type of trading, not everything is going to work 100% of the time. Very dependent upon your style of trading, how you read the market. You know, it's really an internal analysis of how that indicator is going to work for you individually. So that being said, I'm just going to jump on the YouTube here on my phone so that I can get your guys' questions. But the top 3, or I shouldn't say the top 3 because they're all good, but the 3 indicators that we're going to cover today are, we're going to cover the bands, or Bollinger Bands, because that seems to be a really popular one. I'm going to go inside and in depth of Apiary Pivots. Now, the Apiary Pivots are only exclusive to, obviously, Apiary, because it's Apiary Pivots. So if you're with Apiary, you can utilize these right out of the gate, day one. But if you're not going to be able to access it because it is exclusive indicator to Apiary. And then the last one that we're going to talk about is the Parabolic Stop and Reverse, or the SAR, which some of you guys may or may not be familiar with. So I wanted to kind of throw those in there. If you have any questions, or if you have an indicator that your favorite indicator, or one that you'd like to know more about, please, I'm just loading this up real fast so I can get your comments. So please let me know in the comments of, like, hey, this is the indicator I use, or this is the indicator that I see a lot of people use that I'd like to have more information on. Love to give that to you if you're interested in that. Okay, so perfect. Thank you, Oswald, with the zigzag fractals and RSI combo. We can do that one again later. In fact, I'd love to do that one because just looking at your guys' comments here real fast. All right, perfect. I got them loaded up. So if you have any questions, I will be able to grab those. All right, let's get started with the bands. If you guys can look at my screen, and I'm gonna just give me a thumbs up. All right, perfect. You're on my screen. So if you guys, obviously, if you haven't, can see me, hear me, just put a Y in the chat. I'd appreciate it. Just if give me a thumbs up or whatever. If you can see me and hear me okay, if we have no technical issues, we shouldn't, but you never know. I don't want to get down the road and then all of a sudden, hey, I can't hear you. What did you say? Perfect. All right. All right, perfect. Thank you, guys. All right, so let's get started with the bands. So one of the bands, there's a couple rules that you want to know with the Bollinger Bands. Now, the Bollinger Bands were obviously created by a mathematician called John Bollinger, I think in the 70s. I'm not 100% sure on the whole history behind why he created it or anything like that, but I do know that John Bollinger did create them in the 70s to help with his charting, right? And it's a very popular tool. Fast forward even in today, 2019, 2020, we're still using it in our trading today because it is a great tool that'll help you. But there's a couple do's and don'ts when trading. The first do, I should say, is when you have the bands on, it's really simple. We're going to kind of keep this simplified, but basically, let me change this right here. Basically, when the market touches this point right here, and when the market touches the top line, which is this green line right here, it's an indication that we should get into a short and short the market. Okay, when the market comes down and touches this red line right here, it's an indication that we should get in and into a buy. It triggers into a buy. And so the bands are commonly used with people that are day trading, position trading, scalp trading. Personally, I shouldn't say scalp trading. When you're scalp trading, indicators don't tend to really help you a ton because the price action happens so fast. Indicators reads the history and then displays what's happening. So when you're trading like a minute chart or whatever, indicators kind of can give you false reads if you're using them. Or for me, I don't tend to use indicators when I'm scalping. So for you day traders out there, position traders out there, the bands are going to give you a quick, easy to go to indicator that tells you basically when it hits here, I should be selling. When it hits this line, and when it hits this line, I should be buying. Okay, so basic stuff here. Buy, sell buy when it's high, sell when it's low, right? And the bands kind of help you. Okay, we're just gonna try to reverse that direction. So when it hits the top, it says, okay, we're done, and we're gonna reverse. When it hits the bottom, okay, we're done, and we're gonna reverse. Okay. One of the things, there's a couple rules that you need to know when trading with the bands. One is that it is if you're looking for a range or you're range trading. So let's see if we can find a range back in this historical chart. Let's go to a time frame. Let's go to a daily chart and say we're just swing trading. Okay. Say we don't have much time during the week to trade, but I do want to get some trades on. So I'm going to set my trades up at the beginning of the week that are going to maybe hold me throughout the entire week. All right. So you see, I'm going to draw here a range. So I'm going to say this is a trading range right here on this chart. And this is a trading range on the daily chart. Anything that is outside of this range, so this stuff right here, anything that's outside of this range would be considered, well, basically outside range. Okay. If there was data above this, like this came above this, this would be outside our range too. And so if we are trading inside of a period, if we're trading inside this period right here, then bands work. Anytime it breaks the range, bands are not going to work. And so right this second, if you're looking at the data right now, come on, boop, boop, ba-doo. If you're looking at the data right now, right this second, you can kind of say that we're in this range right here. Okay. So hits the top of that range, going to come down to the bottom, hit the top of that range, come down to the bottom. So we can see with the bands, with the Bollinger Bands, right here, we can see with the Bollinger Bands, it just hit that green. So what should we be doing? We should probably be into a sell. It'll come down until it hits the red right here, and then we should be into a buy. Okay? And so that's kind of on a daily chart, hour chart, however long you're going to hold on to this trade. You're going to hold on to it for a week. You're going to hold on to it for a day. You probably should look at the hour chart and find your range. Okay? When you're trading with the Bollinger Bands, never, ever, ever trade in a trending market. In fact, the Bollinger Bands are not good for a trending market or a market that are just going up and down. And you can tell that by periods of the bands will expand and they will contract. And so what you want to do is you want to trade with the bands are contracting or are closer together, because that means that the range is closer. When they expand, it means that they're getting into an outside range. And so you look, or outside the range. So you look here in this range right here, then the bands are closer together, and as it starts to expand, this is where you probably want to sit on your hands or don't take that trade if you're using the Bollinger Bands, okay? So a couple quick tips. First rule, trade. The first rule is you want to fade the moves when it hits the upper end of your range. So when it hits the upper or the top end of your range, so right in here, you'd want to fade that. Okay? So that's rule number one. When it hits the top end of your range, you want to fade that. When it hits, when it hits the bottom end of your range, you want to fade that too. Okay? So as long as you're trading inside the range, you're going to be okay. But the second rule is that as soon as it breaks out of this range, so we get that break, you want to don't trade. Okay? You don't trade, or you sit on your hands, or you don't take that trade if it's outside the range that you're trading in. And then again, that's you want to look at and identify those ranges before you even start trading. The Bollinger Bands give you a good indication of where those ranges are by the period of when they contract, good range, and then when they expand, bad range, right? Or you don't want to trade when they're expanding. Okay, does that make sense to everybody? I'm just going to go over here and jump on the comments. Okay, Brian asked, what are the settings for the Bollinger Bands? And I can show you that right here. So let me show you. Good question, Brian. So indicators, bands, they're the 10 and the 10 period 2 deviation. Okay, that's just the default settings, and that's what I use in here because those are good. You know, you got a 10 period and then a standard 2 deviation on that. So good question. So Deborah asked, what's a fade? Fade is basically when you're fading the market. It's just another term for going against the direction of the movement. So if it's going up and I fade, I'm going to get into a short, right? Or I'm going to sell. So good question, Deborah. I appreciate that. It's just a lot of times traders use different words that mean the same thing. Buy, buy, long, same thing. Bull, bear, or bull, or bull, long, bear, short, whatever. It's the same thing. So when I say fade, it's basically going against the current market movement. Okay, and that's a good thing, is to understand fade, because we use that terminology a lot. So great question. But somebody already answered that. You guys are smart. You guys are good. All right. So that's the Bollinger Bands. So the basic Bollinger Bands is you're looking to sell short when it hits the top, looking to buy when it hits the bottom. The do's and don'ts is you want to trade inside the range. You don't use the band when it breaks out, or when you see that big break to the upside, like right here. You don't want to trade. Just simply sit on your hands or don't trade. And that's the basic step of the Bollinger Bands. It's a great tool for those of you guys who are position trading, swing trading. And then I want to jump in to any questions that we have on the Bollinger Bands. We'll get back to them in a minute because I know there's a little bit of a delay. But we're going to jump over here and look at the pivots. The pivots is one of my favorite tools. Early on, I used the pivots. Great story with this. I don't know if some of you guys know Jeff Crystal, but he's a good friend of Sean's. In fact, they met at a place where Sean was working at early on in his trading career. And Jeff is really good at at trading. Plus, he's also really good at math and numbers, and he has to have it in his head, and he puts it down in networking. He teaches a class at Apiary Fund for CAT tools, which is computer automated trading, because he knows and understands that so much. And so one day, early on in Sean's trading career, him and Jeff got together and they plotted a history, like a 10-year period of history of trading charts. And they looked at all of these different periods of charts, and they said, you know what, wouldn't it be great if we could have an indicator out there that told us exactly when the market was going to change direction? Okay, or not necessarily the market, but a candlestick was going to change direction inside of a range, right? So where made the pivot highs and the pivot lows, and so they charted this period of time for a long time, and they ended up actually creating a robot that could tell you when to place a trade and when to get out and all that kind of stuff. So interesting fact that Sean actually sold that robot to a company, and that's kind of where he got his initial capital to start the Apiary Fund and a lot of other ventures that he's done, is through building this. And so he was able to take what we would call the pivots, which is a beginning stage of that robot or the automated trading, and he turned it into an indicator that we can use and that a lot of traders will use today. And basically how to use the indicator or how to use the Apiary pivots is it's really simplistic in nature, but we're going to go ahead and look at the 15-minute chart as if you're trading, you know, today, or you're trading just on a daily, you know, for a couple hours or whatever, you may look at the 15-minute chart and say, okay, what's the market doing right now? And we can all see that if we look at this 15-minute chart, we are kind of in a range. So this would be our range, kind of right here. If I can draw, come on, right here. So this is our range that we'd be trading in. Okay. It's not going to break the top. Doesn't look like it's going to break the bottom, and it's kind of going from top to bottom. Okay. Inside of our range, we have pivot points, basically where the market is going to go change direction. Or the candlestick for that short-term move, okay? Not a long-term trend changing move, but a short-term trend, not trend, short-term move where you can gobble a couple pips. You know, if you've seen Sean trade, he loves going for 2, 3, 4 pips at a time, right? And so these indicators help you on short-term trading when you're just going for a lot of quick wins, like, you know, 10 wins in a row, 20 wins in a row, where you can see where the pivots are going. Now, the difference between the orange pivots and the red pivots are just movement, okay? Red basically equals that you're gonna get a stronger move. So this is a major pivot, and this is a medium or minor. And you can certainly have a bunch of oranges before you get a red, okay? So if you look at this historical chart, or you look at the history of this chart, is like, okay, this candlestick just created a red pivot, so that we should be now selling until we see the next red pivot, and then we should get into a little bit of a buy until we see the next red pivot. Okay, so and so this is really good if you're playing, you know, the major pivots here. Plus, it's also a good indicator of when we think the market is going to go up and go down, right? So you see this right here, and then there's a pivot here, pivot. So you can see, hey, this is a pivot, major pivot up, major pivot down. Okay, so basically, that's it. I mean, it's really simple. It's really simplistic. All you got to do is know, okay, if you watch the charts, and we'll go to a 1-minute chart here real fast. The reason being is because you'll see how the pivots are formed. Now, I don't trust the indicator so much on the 1-minute chart as it does better on the longer time frames, because the data, right? I'm just getting the price action is happening a lot faster. So you often will see a pivot form, and then it can move, and it moves on the 1-minute chart, but you trust the 5 and the 15 a little bit more. But I wanted to show you guys real fast that if you're looking, a pivot will form on this chart at some point, and we got this red pivot here. So we got this red pivot here, and we're looking for it to form another red pivot somewhere probably in this area. So Sean doesn't use these in his trading because he built it so he can see it with his eyes, and he knows exactly when the market has the highest probability of shifting to an upside or a downside. Okay. Any questions on that? I'm going to just jump over to YouTube real fast and see what kind of questions we have. Okay, great question. Where are your stop losses and take profits? Okay, that is a great question. So back to the Bollinger Bands. In fact, let me address that on the Bollinger Bands, and I'll address that. And so basically, where I tend to put my take profits, for me, if I'm down and the market hits this period, or the market hits this red right here, I'll kind of put my take profits right here on the blue. Okay, so I'll have actually, I'll have my take profits back to the green line, because I hope that it hits there, but I'll take half of my position right here. So if I'm trading 4 trades, I'll pull 2 off and keep 2 on until it hits that green again. My stop losses, I will always put, my stop losses I'll always put below the range. So my stop loss is going to be kind of right in here, below that range. So if it breaks out of this range right here, I want to be out of that. I want to take my, if the market moves from a contraction to expansion, I want to be out. Okay, because the Bollinger Bands are not good, or basically I'm playing inside that range. And so as soon as it hits outside the range, I trigger my stop losses to get out. Now, I don't put them exactly right here. I give it a little bit of time, because a lot of times we know we get false breaks, right? And so is it really going to break or come down and then just go back up and still technically be inside that range? And so I often put my stop losses below that last pivot low or above the last pivot high. Personally, that's where I put my stop losses and my take profits, again, when I'm trading the bands. When I'm trading the pivots, kind of do the same thing, although I don't, and I kind of do the same thing with my pivot points, is I put my stop losses below, let me delete all that. I put my stop losses here. So below this last support or resistance, I should say, support levels or resistance, whatever, or my stop losses here. Okay, depending on what direction you're going. So if you're selling or you're buying, this is where my stop loss is. If you're selling, that's where my stop loss is. So on the last major support is kind of where I put my stop losses, or when it breaks out of this range that we can see that it's kind of in right here. Okay, again, the range breakout. My take profits, when I'm scalping, I always have a take profit of just 2 to 3 pips. That's my target, but I adjust those. And so let's say that there is, let's say we're still, we got that pivot that formed right there. And so now we should be looking for it to kind of reverse. So if I'm in a buy, is there 2 pips from this pivot to right here is where I love. And if there's 2 pips right there, that's my favorite trade setup in the world. I do that all day long, take that all day long. If there's two pips between this right here and that right there. Hopefully that makes sense to you guys. And so I'm looking at it just a little bit different if I'm scalping versus day trading, okay? And again, use the bands if I'm more day trading or holding onto a position. I use the pivots if I'm going to be trading, if I'm looking at the 5 or the 15, and I can still scalp. I can still scalp with the pivots. I'll just know that on the 5 and 15, that this is, if I'm in a direction that's not concurrent with the pivots, I may want to change my way of thinking or get out, right? So I can scalp, I can get in on the 1-minute chart and play around, but I'll have this one off to the side. So I have the 15-minute off to the side right here. And so I'm looking at the pivots over here, but I'm trading over here on the 1-minute chart, okay? Does that make sense? So I'll see that, okay, wait, the market's starting to go up, see those pivots, and so it helps me, it gives me an indication of where maybe the market is shifting, and if I'm in a buy, great, if it's in my favor. If I'm not, if it's shorting, then maybe I should think about changing direction at that point. So hopefully that makes sense to everybody. All right, so just like we talked about with the Bollinger Bands, how the Bollinger Bands are great in a contraction market or a market that's not trending, a non-trending market, and you don't want to trade them when the market starts to trend or it starts to break out into an outside of your range that you want to trade in. Conversely, there's another indicator called the parabolic stop and reverse that is great when in a trending market and not so good in a non-trending market, okay? And so it kind of reads the same way as a Bollinger Band. And by the way, how you add indicators to the chart is you just click over here and here's your indicators, your indicator list. You just grab one, throw it on. If you want to remove it, you got to right click on the chart, go indicators, click the indicator you want to remove, and hit delete if you have multiple indicators. Okay? So just out of curiosity, do we have anybody out there that actually uses the SAR indicator or the parabolic stop and reverse indicator? Okay. Okay, I'm just looking at your guys' comments real fast. Brian asks, how many bars from a pivot? You know, it's not a clear and concise point. It's basically pressure with the wicks whenever the indicator feels like it's about to change direction. So that doesn't necessarily have a bar count. It's basically pressure in the market or price action movement, right? So we'll give you that indicator. Let's see. Okay, so anybody out there that uses this? Okay, so I'll leave that question out there and just kind of curious if we have anybody out there that uses the SAR indicator. So basically it's the exact, I shouldn't say the exact opposite. Basically it's opposite to the bands like we were talking about. You want to trade it in a trending market and you want to not trade it in a sideways market, okay? But one of the things that I do love about the parabolic stop and reverse is it really is good if you want to use trailing stops. Okay? If you want to know exactly when to get out of a trade, it's going to help you a lot with that. And so let me explain. So the first do's and don'ts, obviously we talked about trending versus non-trending. How you read this is basically when you see these dots above price, when you see those dots above price, that's a good indication that you'll want to basically sell. When you see the dots below price, that's a good indication that you want to buy. Okay, so let's look at this hour chart. Let's say we're gonna trade and get into a couple day trades, right? And here we got a good breakout or a good trend to follow. And so we'll get into a trend, whether we get in here or here or here, it doesn't really matter. But the fact that we're into this uptrend, we're going to follow this trend. As long as these dots stay on the bottom, we're going to follow this trend until you see the dots form on the top. So once the dots switch, that's a good time for you to exit your trade or to get out of your trade. Okay? So you exit that trade and you get out, and that's what you're looking for. Now, as the dots deviate or they expand, that means that the trend is getting stronger, right? And so you see these dots that they're really small together, or they're really bunched up here, they're bunched up here, but now they start to expand. It means that trend is a stronger trend, and you should follow that trend, right? Or you should jump in on that trend if you're trend trading. So again, this is the hour chart. So if you're in a trade here, you get in here because it's telling you to, and you get out here. Let's just measure that real fast. How many pips would you have done using this indicator? So let's say you get in here, follow that all the way up, and you get out. So there's a 50, you would have made 50 pips over 35 hours, right? And so you kind of look at that. And so there I've given you kind of two indicators that kind of work in different scenarios. Bollinger Bands, contracting market, not so good in a trending market. The stop and reverse indicator, the SAR, good in a trending market, not so good in a consolidating. So basically the theory behind the stop and reverse indicator is that you're going to get out, you're going to stop your trading right here, You're going to stop your trading right here and then reverse your trading right here. So I don't necessarily follow the reverse because I'm not going to reverse because it's basically not going down. It's continuing to follow that. And you see this right here. So that's another thing that I would also recommend is only trade it when you see a trend and it's a good indication of when to get out. And wouldn't necessarily stop and reverse like the indicator says that you should, because a lot of times we see that it doesn't stop and reverse. Basically, it's saying that that the market's going to do this, right? The markets never trade in a V shape. They never do. And so normally you see where it's the trending market, then it's sideways, and then what typically happens is it could continue on or it could go down, right? But this indicator doesn't really know what direction it's going to go. And so it tries to tell you that, oh, it's done going up, so go down. And so I'd be very cautious of trading and getting out and getting back in on the reverse. Okay, so basically that indicator, in my opinion, should be just trailing stop indicator. When is the best place to take my profits, or when is the best place for me to exit a trade and then wait or sit on my hands or use the bands, go back and use the bands for this period, right? Because now we're in a consolidating market and the bands are going to be better. So you can interchange the two different indicators. And a lot of times we need that as traders. A lot of times we need more than just one strategy, more than just one arrow in our quiver, so to speak. And so we can know what to do when it's a trending market. We know what to do when it's a consolidating market. We know what to do if it's an outside range or inside the range. We know when to fade, when not to fade. And we start putting all of these things together and we start looking at the market and say, what is the market doing right now? Oh, it's consolidating. Well, that's probably a good indication that I should probably use the Bollinger Bands to help me, to assist me in this trading session. Or, oh, it's a trending market. Maybe I should get in and follow the trend and let the SAR tell me when I should get out. Or, you know, maybe I want to ignore consolidating and trending markets altogether and trade and just scalp and get 2 to 3 pips inside of an hour and I'm done trading for the day. Personally, that's how I do it, right? I don't necessarily look at larger time frames because I'm only trading for an hour or two, so I don't really care if it's a trending market or consolidating market. I do care about outside ranges when I'm trading with the pivots. So hopefully I've given you about 3 different styles, 3 different techniques, 3 different strategies that you can deploy in a myriad of different market conditions. And not one indicator is perfect. In fact, a lot of times you combine indicators to make an even better assessment, like an EA or SMA, which are just, you know, simple moving averages, and so that kind of helps you to clear instead of the muddy waters, and clear the waters, I guess you might say. And so we didn't really get into pairing indicators today. We didn't really talk about how you would pair an indicator. I wanted just to keep you with basic indicators that would be good or conducive or good in the right current market conditions. Really, the gist of all of this, the one thing that I hope that everybody gets out of it is there's just not one way to trade. And as you evaluate and understand the market, you can shift your trading that's appropriate to the market. A lot of times as new traders, we kind of want to have the market change to the way we trade. And some days it does. Some days it aligns perfectly to your style. And as we all know, other days it doesn't. And so how do we change, adapt, and overcome current market conditions? Well, hopefully I've just given you a couple insights as to how you can change, adapt, and overcome when you see market conditions that aren't conducive to your trading style. So with that, I'm gonna answer a few questions and then we'll wrap up. But let me jump in there and see what kind of questions that we got. I love the comments and it helps me too as well to kind of feed you guys the information that you need. Okay. Okay, I think I've answered that question. The pips per value in the scalping technique, I usually go for a couple pips. Let's see. The link, thank you, Tom. I will make sure that the link that didn't work? Is it the link? And are you talking about the link on the I think you're talking, are you, Tom, if I could ask you a quick question, you're talking about the link that is in Apiary Fund, the calendar. If that's the case, I can easily fix that and make sure that we get that changed every week. So, Tom says, oh, Tom, you used the SAR on one chart. You have to act fast. That's a good one. So Greg asked, with SAR, is there a better time frame to use? I would kind of tend to do like a day trading type thing where you're in a trend or you see that trend, like right here, you see this trend happening, right? And and these dots are on the bottom and they're continuing to be on the bottom. And so I necessarily wouldn't say that you need to do like a day chart or a month chart, but I would recommend that at least an hour or longer on the charts for that to happen, because you want to establish a trend. And I wouldn't say that 15 minutes is going to be long enough for you to jump in or for that indicator to really to give you enough solid conclusive evidence that you want to jump in on this trend. Okay, hopefully that makes sense. Okay, Ofer asks, how do you decide that the market is trending or moving to the side? That is a great question, and one that I can simply answer by looking at your ranges. Okay, so again, know where your ranges are, and as soon as it breaks that range, so here's a range. Keep hitting need the pencil tool. So it's trading in this range right here. Okay, as soon as it breaks above that, if it continues, then we have a trend. If it goes this way, then it's a false break, and it comes back into this trend, into that range, right? A lot of times it can break out and then come right back. But if we continue, basically a continuation would be a sideways move right here, another range, and then it breaks out again. So that, to me, is a confirmation of a trend. Okay? Hopefully that makes sense. That's a good question, Oswald. Can you teach switching techniques during different market phases? Yeah, I mean, on the surface, I mean, maybe we can dive a little bit deeper into another episode, but on the surface, Oswald, I would just say that as you start trading, which you've been on here, so I'm pretty sure you're confident in identifying, personally you, but other people, confident on identifying from a period of expansion, to contraction. If the market is expanding, trade the expansion technique. And if it's contracting or moving sideways, trade the sideways technique, right? I mean, we can dive more into that about switching techniques and all that in another episode, but we don't have a whole ton of time to go over all that. All right. Anyways, basically those are some really, really good beginning indicators. And as you get more involved, again, you probably want to look to pair them. You can pair the Bollinger Bands with, even the MACD or something like that. You can pair the support and resistance, or stop and reverse, not support and resistance, but stop and reverse. You can pair that one with like an EMA or a moving average to kind of help you to indicate when that trend might occur, right? So anyways, a couple basic strategies, hopefully not too complex, or indicators not too complex. But again, the main difference is know what market you're in, know what conditions you're trading in, and deploy the strategy that is conducive to those market conditions. And I think you'll find a lot more success in your overall trading as you switch in and out of different types of strategies depending upon what the market is giving you. So with that, I appreciate you guys jumping on today. Hopefully I was able to help some people out there. And again, in your comment section in the chat room, what would you like to see? What would you like us to cover? What's going to help you to become a better trader? Let me know, and we'll put something together on that. So again, thank you guys, and have a wonderful day, and we'll see you next week.